How do credit cards function? A credit account with a financial institution is connected to a credit card. You are borrowing money from the credit card company each time you use the card. Any retailer that takes credit cards will let you use your card to make a purchase of products or services. A cash advance is also possible with some cards, although it's not advised due to the large fees. The balance on a credit card refers to the amount you owe. A $100 purchase would result in a $100 rise in the balance on your card. There is a credit limit on each credit card, which is the most you can ever owe the bank. For instance, if the credit limit on your card is $1,000, the debt cannot be higher. Your available credit is the sum of your credit limit and outstanding balance. Using the aforementioned example, the available credit would be $900 if your card has a $1,000 credit limit and a $100 balance. You can borrow money again once you make a payment on your credit. A credit card is seen as a revolving line of credit as a result. As long as you pay your bills on time and have credit available, you may continue to use it and borrow money from it. April definition. The yearly fee for using a credit card is known as the April, or annual percentage rate. It refers to the interest rate that the card issuer applies to any balance that remains unpaid after the due date for payments. Fortunately, paying down the entire statement balance on your card will save you from paying interest. You won't have to pay interest on your purchases if you do that. Here's an illustration of how April operates. The April on your credit card is 20%. You currently have a $1,000 balance. If you keep that balance on the card for a year without paying any fees, it will increase to $1,200. 20% of $1,000 equals $200, which is added to the initial debt. No interest will be charged if the entire $1,000 debt is paid by the due date. You couldn't actually leave that balance unpaid for a whole year. To maintain the health of your account and avoid penalties, you would need to make the minimal payments each month. That was merely an illustration to illustrate the idea of credit card interest. How to increase credit. It's crucial to use your credit card in a way that raises your credit score after you've been given approval for one. What you must do to establish credit using a credit card is as follows. 1. Pay promptly. Always paying on time is the finest thing you can do for your credit. The most important aspect in calculating your credit score is your payment history. Therefore, making on-time payments can help you build outstanding credit. Most credit card companies have an autopay option. You can make sure you never miss a payment by doing this. As an alternative, you can give yourself a monthly reminder. Observe your FICO score too. Despite the fact that there are many credit scores, lenders most frequently utilize the FICO score. A minimum of once per few months should be spent checking yours to make sure you're moving in the right path. If your credit card doesn't have a FICO score tracker, there are still free options to check your score online. 3. Maintain a low balance. If your credit card amount increases too much, it will hurt your credit score. Try to never use more than 30% of your credit limit to prevent this. To determine 30% of your credit limit, multiply your credit limit by 0.3. 4. Request an increase in the credit limit. Ask the card issuer for a credit limit increase after using your card for 9 to 12 months and paying your bills on time. It may be simpler to maintain your balances within the suggested 30% ratio if your credit limit is bigger. 5. Maintain your account active. Your average account age is one aspect that influences your credit score. To help raise your credit score, it is advised to keep older accounts open. Avoid closing any credit accounts, especially your first card, as it will be the oldest. 6. Only rarely apply for new cards. You'll start to qualify for credit cards with more perks as your credit improves. Opening a new credit card that could help you save money is fine, but don't go overboard. Your credit score is somewhat impacted each time you apply for a credit card. Making too many applications can make it challenging to keep building your credit. So that your credit score keeps increasing, apply for a new card once a year, or maximum once every 6 months. What quality should my first credit card have? Beginner credit cards typically have features or benefits that are intended for first-time users. The finest initial credit card should have the following characteristics. 1. No yearly charge. Your first credit card should ideally be one you wish to keep open indefinitely because it will help you increase the length of your credit history with each month that goes by. The greatest first credit card, in our opinion, is one without an annual fee, so you won't have to pay to keep it open each year. 2. Track your free FICO score. Your FICO score is accessible for free with some credit cards. You are now able to monitor your credit score from your online credit card account. 3. Having no or little security deposit. For people with little credit history, secured credit cards are very common. You must pay a refundable security deposit to obtain this kind of card. The credit card company can be more lenient in who it authorizes because it receives a deposit up advance. You have other options besides secured cards, therefore it's important to consider unsecured cards as well. You might be able to avoid making a deposit that way. Choose a secured card with a manageable deposit if you decide to use one. Ideal credit cards have a $200 credit limit and require a $200 or less deposit. 4. Rewards aren't a deal breaker because a starter card's main goal is to help you establish credit so you can later be eligible for better rates on loans and cards. However, if your first credit card allows you to earn points, it's unquestionably a useful feature to have. For more informative videos like this, subscribe.